All right. Bang, bang. What's going on, everyone? We're going to wait a couple minutes as people start to trickle in. Today, we are going to be talking about Bitcoin. What is it? How does it work? Why is it important? And how does it fit into the global macro economy? Before we get started, please smash the like button, subscribe to the channel, and if you like all of this content, you can go to pompletter.com. I've left the URL in the chat. I write a daily email where you can get that every single morning in your inbox. So smash the like button, subscribe to the channel. Let's get into it. First, let's start with what is Bitcoin? Simply, I'm going to explain all of this in a very generalized manner. Think of this as kind of Bitcoin 101, and then we'll kind of graduate to higher levels of understanding. And what I'm going to try to do here is use very plain English and very concise explanation. So what is Bitcoin? Bitcoin is digital money. And in order to understand Bitcoin, we first have to start with what is money. And money has two properties. It is a store of value and it is a medium of exchange. And if you go all the way back to ancient Roman times, every single money has served as a store of value and a medium of exchange. Now, ultimately, the things that have served as money have evolved throughout the years. So we had everything from precious metals to seashells to paper, claims on commodities, all kinds of different things. But at the end of the day, money is a belief system, right? Especially in a fiat world. If you think of the US dollar, it is simply the belief between two people that thing that is being transacted, that dollar that is being exchanged for a good or service has value. If the two parties do not believe that it has value, then it is not money because it cannot be used. If both parties believe, then it is money. So that is what money ultimately is. Money is a belief system. And what we've seen is it serves as a store of value and a medium of exchange. And so Bitcoin is merely digital money. If you think back before the internet, there was all sorts of analog businesses. When the internet came along, we simply took the idea of those analog businesses and we put it on the internet. We made some changes, we improved things, we made some tweaks, but what we did was we took business that existed in the analog world and we put it on the internet. We digitized the business. What Bitcoin is Bitcoin is taking the idea or concept of money and it is just digitizing or putting it into the digital world. Now, we've made a lot of improvements. We've made a lot of tweaks to kind of existing money to Bitcoin, but that's ultimately what we're talking about. It is simply digital money. And so how does Bitcoin work? Bitcoin works off of the same exact concept that Monopoly works on. So what I like to talk about is Bitcoin uses a transparent public ledger. And those are big fancy words that people use to try to sound smart. But what exactly is a transparent public ledger? It's simply, if you were playing Monopoly and you have four people sitting down in front of the board game, everybody sets up the board, you take the money and you put it out in front of you on the table, and then there's a bank. And that bank is a collection of all of the money that's not in an individual's, in front of them on the board. And the reason why there's only four people who are playing Monopoly, but you don't have a banker, is because there's full transparency in the game. So if I roll the dice and I pass go, I reach in the bank and I take $200. Everyone at the table can see that I took the $200 and I put it in my bank. If all of a sudden I buy a property or somebody buys one of my properties, the exchange of funds at the game is all done publicly and transparently for everyone to see. Because it's public and transparent during the game of Monopoly, there's no need for a third party or some sort of authoritative figure, right? When you're kids, you don't need your parents to sit over you and say, okay, Johnny, give the $200. It's just known that the four players at the table can understand because it's a public transparent system. Now, in the legacy fiat system, right, in the legacy finance system, almost every single transaction that occurs, whether it is with money or other financial assets, there is a centralized third party. All that means is if I want to do a transaction with you, I take the asset that I have and I go to give it to you, but I can't give it directly to you. I have to give it to somebody else who gives it to you. They process the transaction. And so ultimately what you and I are doing when we enter into a transaction or an agreement is we are trusting that that centralized third party is going to do what we want them to do. But in some cases, they don't do what we want them to do. They may go rogue. They could steal. They could do something that they claim that we don't fit their profile, and so they don't want to process the transaction, all kinds of different things. But one of the points of failure in the legacy system is that we have to trust this third party, this centralized system. Bitcoin, one of the improvements it made was the public transparent ledger. And that public transparent ledger meant that nobody had to trust a centralized third party. I now can transact directly with you across the Bitcoin network, and no one or nothing can stop us from transacting. It is a fully decentralized system. Decentralized just means nobody's in control. So a lot of people, when they hear that the Bitcoin system is decentralized and no one's in control, the first question is, well, how does that work? So essentially what is going on is Bitcoin was launched on January 3rd, 2009. And when it was launched, every single transaction that has ever happened is on a public ledger, right? If you go back to the Monopoly game, it would be like every time there was money trading hands, either from the bank to a player or from player to player, there was one of the players sitting there and they wrote down the transaction. So Johnny gave Sarah $200 and they wrote it down on a piece of paper. On the next line, Sarah gave Anthony $100, right? And every single transaction just got written down. But after 10 minutes of playing, we said, wait a second, rip off that piece of paper from the notebook and put it to the side. That would then start us writing down the transactions for the second 10 minutes of the game. And if every 10 minutes we ripped off the piece of paper and simply stacked it on the last piece of paper, at the end of the game, we would have an entire pile of paper where we could go back and we could look at every single transaction that happened in the Monopoly game. And we could even go to the exact time. So if we said, hey, between 7:10 p.m. and 7:20 p.m., I think I gave you $300. We could go back in the transactions and we could find 7:10 to 7:20, and we could find that exact transaction written down. That's what the Bitcoin blockchain does. And that's a very overgeneralized example. But ultimately, what the Bitcoin blockchain does is every single transaction that happens in about a 10-minute block gets written down digitally, and then it gets blocked together. So there's a block, right, or a group of these transactions, and it's kind of tied up in a 10-minute block. And then that block is tied to or connected to the last 10-minute block. So the Bitcoin blockchain is simply a chain of blocks that hold transactions in them. And each block contains about 10 minutes worth of transactions, and they're all just chained together. So the 10 minutes that's occurring right now, when it's over, we will take all the transactions that happen in that 10-minute period, and we're going to chain it to the last 10 minutes. And you can go all the way back to January 3rd, 2009, and you can see every single transaction that's occurred. So part of the beauty of this system is not only that nobody owns it, nobody controls it, but also that anyone in the world can go and see every single transaction, right? Again, it's a fully public, transparent system. And so this entire idea of Bitcoin is built on something that people refer to as trustless. And what that means is you don't have to trust the system. You don't have to trust a centralized third party. You actually don't even need to trust the person that you're transacting with. Everything that you need to do, you can verify, right? There, you can go and find the truth. And what I mean by that is when I send a wire at a bank, I'm trusting that the bank's not going to take my money, that the bank is actually going to give it to the right person, and that the bank or the recipient's bank is going to accept the money. So I'm trusting multiple parties in that transaction. Here, I don't have to trust anybody to send it. I don't have to trust anybody's bank to receive it. And I can actually go verify that the money was sent, right? The Bitcoin was sent, and I can verify who received it, how much, and I can even see what they do with it. And so when you kind of go through this system, it is a public, transparent system that is not owned by anybody. It's fully decentralized. And so a lot of people will say, okay, well, how is that run? How does the transactions get processed? If you're processing transactions, you need some sort of computing power to do that. You're right. It's in the Bitcoin system, there's something called Bitcoin mining. And you can think of the miners, all they are doing is they are processing transactions, right? They are there to run the Bitcoin software in a very generalized manner. And what I mean by that is they essentially have specialized computers that are very high computing power, and they run the Bitcoin software and they process transactions, and they're financially incentivized to do this. How are they financially incentivized? Well, There's only 21 million Bitcoin. So there's an artificial supply. There will never be more than 21 million Bitcoin. And in the beginning, starting in 2009, every 10 minutes, 50 Bitcoin were released to everybody who was running the software. So that 50 Bitcoin that was released in the first 10 minutes went to everybody who was running the software. Now, not every single person got 50 Bitcoin, but it was split up among everyone running the software. And so the next 20 minutes or the next 10-minute block, so it's kind of 10 to 20 minutes, now everyone running the software got access to 50 Bitcoin, right? And it got split among everyone running it. And so that has continued since 2009 all the way up until today. But the one thing that happened in the Bitcoin system was that it was programmatically designed for that 50 Bitcoin per 10 minutes. That's called the Bitcoin reward. That 50 Bitcoin per 10 minutes gets cut in half every 4 years. So it started out at 50 Bitcoin. Every 10 minutes for 4 years, 50 Bitcoin was distributed to everyone who was running the network. After 4 years, it got cut to 25 Bitcoin. Then for 4 years in a row, 25 Bitcoin was given to every single miner. For 4 years that happened, and then it got cut to 12 and a half. And so every 10 minutes for another 4 years, 12 and a half. In May of 2020, it just got cut from 12 and a half to 6.25 million or 6.25 Bitcoin. And so that 6.25 Bitcoin is distributed to miners every 10 minutes. That is their financial incentive to run the Bitcoin software and process the transactions. The beauty is that you can actually find truth one of two ways. You can either rely on a centralized third party. They're in charge. They're the authority. They have all the power, and they tell all of the participants in a market what is true and what is not. If the bank says that you did something, then you did it. If the bank says you didn't do it, then you didn't do it. You have no way to tell the bank anything, right? If all of a sudden the bank, you went to the ATM tomorrow and the bank said, nope, you don't have $5,000 in your account. Now you only have $1,000. How would you prove that you had $5,000? Right? It's a centralized party. They have control. That's where the risk is. So one way to get to quote unquote truth is to have a central party tell people what the truth is. The other way to find truth is to have consensus among 51% or more of a very decentralized distributed network. And that's what the Bitcoin system does. The Bitcoin system has millions of nodes all around the world, completely geographically distributed, and they all work together to find the truth, right? To process the transactions and determine truth. And so that is the beauty of the Bitcoin system, is that it is fully decentralized, fully distributed, and it doesn't rely on any centralized third party. So why is this system important? Today, we have two financial systems. We have the legacy finance system that relies on a fiat currency, the US dollar, as the core unit of account. And that core unit of account has a monetary policy that is inflationary in nature, meaning that they constantly produce more of it and it devalues over time. Since the early 1900s, the US dollar has lost 95+% of its purchasing power, right? So what $1 could buy 100 years ago is much, much more than what $1 could buy today. So you need many more dollars to buy the same amount of goods or services that you needed 100 years ago. That's because it's inflationary in nature. Bitcoin is 180-degree opposite. So the second financial system, or the alternative financial system, or what people call the Bitcoin system or the digital finance system, is all based on a deflationary asset. And all, again, big fancy finance word, all that means is there's a capped amount. There's only 21 million Bitcoin. About 18.4 million Bitcoin have already been put into circulation through that Bitcoin reward that we talked about, that mechanism. And so there's still just about 2.5 million Bitcoin that are going to be distributed over the coming years and decades. And so in a deflationary system, what that means is that the asset, the core unit of account, a Bitcoin or a fraction of a Bitcoin, will continue to increase in value rather than decrease, because supply and demand economics tell us if you have a fixed supply of an asset and demand increases, then the only thing that can happen is you could either try to produce more of the asset or the price has to go up. Because Bitcoin can't be recreated, no one's producing more Bitcoin, that means that the price continues to rise. Bitcoin has grown in US dollar terms at a compound annual growth rate of over 30% for many, many years now. And so the deflationary nature or structure and design of Bitcoin is 180 degrees difference. It's the complete opposite of the inflationary fiat system that we all had grown up using. Now, Bitcoin, because it's still injecting new supply, right? There's still a daily incoming supply. There's 900 Bitcoin per day that are put into circulation that are net new to the system. There's only 21 million total, but the circulating supply gains 900 a day right now. That means it is a disinflationary system or a disinflationary monetary supply. All of that means, again, big fancy words in plain English, that means that you've got a certain amount of Bitcoin that's created every day. Before May of 2020, that was 1,800 Bitcoin. It got cut in half. Now it's 900. In 4 years, it will get cut in half again, and it'll go from 900 to 450. So dis means it's going down. Inflationary means you're adding some to the circulating supply. So it's a disinflationary monetary supply schedule that is built in a deflationary monetary structure or design. And so Bitcoin, being a deflationary structure and complete opposite of the fiat system, provides an alternative. Historically, every single money in the world, every single money was a fiat currency, which meant that if you go back to money, right, in the legacy sense of it, we've used commodities for money for a long time. So take gold, for example. Gold was used on coins and bars of gold to buy goods and services, for trade, for barter, all of those things. It's very hard to carry around. It's heavy. It's very hard to divide it. It's not very divisible, right, in terms of you got to shave it off and things like that. And so what we ultimately came up with was we said gold is really, really secure, right? We know where the gold is because I can hold the gold in my hand. It's heavy. It's hard to produce, all these things. But it's hard to actually use for transactions. So we created paper claims on the gold. Those were, in the dollar system, dollars. Those dollars were merely, you could go exchange a dollar to get gold back, right? They're interchangeable. You just had a paper claim to the gold and the gold sat in a vault somewhere. So it was much easier to use the dollars to transact than actually use the gold. But in 1971, we decided in a temporary measure at the time to break from the gold standard, to say you no longer can take your dollars and turn them in for gold. The dollars are not backed by anything. And so this was the rise of the fiat currency experiment. Fiat simply just means it's not backed by a commodity. It's just a piece of paper. And so in the current system today, what we have is we have a money system that is determined by, in the United States, the Federal Reserve, and other countries, the central banks. And that money is a belief system. We all believe it has value, right? I use dollars. Everyone here probably uses dollars as well. And that money has become the global reserve currency. It's backed by the strongest military in the world. It's backed by the greatest economy in the world in terms of the United States and, post-industrial revolution, all these things. So that is what has given it value, is the belief that it has value. But as we have seen in many, many other countries around the world, if it gets devalued too quickly because you can produce more of it, if a country loses discipline, that currency can be, the faith in that currency or the belief in that currency can be lost by the citizens. So if you look in places like Lebanon right now, in Venezuela, Zimbabwe, other countries in history, what you find is that the currency gets devalued so quickly that all of a sudden people say, wait a second, I'm actually losing money because I need way more of this currency to buy the same goods and services that I needed yesterday. So obviously the currency is worth less money and therefore I need to get out of it. And so ultimately the belief system breaks down and people flee a currency and they go into other assets, whether that's gold, another fiat currency, whatever it is. The beauty of the design of Bitcoin is that it is not inflationary. You cannot produce more. And therefore, rather than it lose value over time like a fiat currency, it actually gains value in time as long as demand continues to increase. And so again, for over a decade, demand has not only continued to increase, it's continued to increase at a very, very fast pace. And so for the first time in history, what we have is we have two financial systems. We've got the legacy finance system that uses the dollar as the base unit of account. That's an inflationary currency. We also have an alternative financial system that has a digital, decentralized currency as its core unit of account, which is Bitcoin, and it is deflationary in nature, meaning that it's not going to have more made of it. Now, many of you are saying, wait a minute, there's only 21 million Bitcoin. How could everyone in the world only use 21 million Bitcoin? Well, Bitcoin is highly divisible, right? So you can divide it up. You can actually go and buy just a couple of pennies worth of Bitcoin, right? You don't have to buy a full Bitcoin, which today is about $11,000. You can go buy $10 of a Bitcoin. You could buy $50, $100, $500 of a Bitcoin, right? You don't have to only have a full Bitcoin. You can get a fraction of one. And the way that those are talked about or measured is in something called a Satoshi. Now, a Satoshi is there's 100 million Satoshis per Bitcoin, right? So if you think about 100 million Satoshis per one Bitcoin, and then there's 21 million Bitcoin. Now, what you will hear people talk about is 10,000 Satoshis, right? That is equivalent to pennies in the fiat system. So you've got Bitcoin, that's a full Bitcoin, and then you've got Satoshis that are fractional shares or fractional percentages of a full Bitcoin. And so now all of a sudden you have a system that looks very similar to the fiat system, right? You can use a $100 bill, or you can use a $20 bill, or you can use a $1 bill, or you can use pennies, dimes, nickels, quarters, etc. So same thing here is you can have a full Bitcoin, right? Again, is equal to about 11,000 US dollars, or you can have a very small percent. You could have 4 or 5 Satoshis. You could have 10,000 Satoshis. You could have 100,000 Satoshis, a million Satoshis, right? There's 100 million Satoshis per Bitcoin. So why is this important? Historically, if you did not believe that a fiat currency was going to serve you best, doesn't mean it has to fail, but just you didn't feel like that served you best, you had no other option other than to go to gold, which again is not a great way to transact as a medium of exchange, or you had to go to another fiat currency. So if you didn't want fiat currency, there was no way to kind of opt out of this legacy finance system. Now, with Bitcoin, there's a way to actually opt out of the system. And so what millions of people have chosen to do is take some percent of their net worth. Doesn't mean that it's a lot. Could be only 1%, could be 50%, right? Anywhere in there. They've chosen to take some percent of their net worth and opt out of the legacy finance system and buy Bitcoin and use that as their new core unit of account. So in their head, they don't price things in dollars. They will actually price them in Bitcoin. So for example, if I want to buy, let's say, a new phone, I could say, okay, that is 1,200 US dollars. Polina's back there, says hello to everybody.
Hi, guys.
So that is 1,200 US dollars to buy a computer. But if I want to pay for it in Bitcoin, I could think to myself and say, wait a second, that is 10 million Satoshis, right? Or 15 million Satoshis. And therefore, that's how I'm going to pay. The denominator or what the asset is denominated in ends up being Bitcoin rather than dollars. And so ultimately, this is a separation of a legacy system and an alternative system. One has the dollar and other fiat currencies as their core unit of account. The other, the digital decentralized system, has Bitcoin as the core unit of account. And so when you look at what's happening in the world, we continue to see governments devalue their currencies. And they do that through quantitative easing. So if you look at kind of the macro environment, what occurs at the macro environment is the exact same thing all across the world. A government creates money at their central bank. They then, when there is a market downturn or there's some kind of issue in the economy, they sit there and they say, well, we could let the free market determine what happens here. But actually, if we step in, if we start to intervene, and maybe we just give ourselves a little jolt, we could print a little money, we could drop interest rates, or we could kind of manipulate the economy, we can get high again. And so it's very similar to the economy is very similar to a drug addict. If you're a crack addict, there was a point where you were sober. You'd never tried crack before. You try it for the first time and you get high. You like it. You want to get high again. So you take more crack. You get high a second time. You like it again. Every time that you take crack, you've got to take more and more to get the same high, right? It becomes less effective as a drug. So you have to take more and more. And ultimately, if you take too much, you literally overdose and you die. Well, economies are no different. There was a time period where there was no monetary stimulus. There was no quantitative easing. There was no intervention by the government. But as we started to intervene and print money and inject this quantitative easing and monetary stimulus, we became addicted to that stimulus. It was like an adrenaline punch, right? Like, oh man, every time we do that, everything goes up. And everyone would say, wait a second, if asset prices are going up, the economy is great. Let's do that again. And so the two last examples, in 2008, we saw this. Asset prices sold off in the summer of 2008. The government stepped in. They printed hundreds of billions of dollars. And when they printed hundreds of billions of dollars, what happened was all of the asset prices stopped falling from the liquidity crisis, and they all recovered and then rallied. So something like gold, for example, dropped 30% over the summer of 2008. And then the government started to print money, and then gold went up more than 200% and hit an all-time high of $1,900 in 2011. Well, they, in this most recent economic recession, have used the same playbook. There was a global pandemic, there was a healthcare crisis or a virus that led to governments saying, we are going to shut down local, state, and federal economies, right, or national economies, and that slows the velocity of money. So investors then enter into this liquidity crisis. They want dollars, but they have assets. So they need to sell the assets so they can get dollars. And they look around their portfolio and say, what has a liquid market? What can I sell? And they start selling assets. And there's so many people selling that the prices are dropping and the dollar is strengthening, right? If you think about every single price you think of, so gold, stocks, Bitcoin, whatever, there are two numbers that determine that price. Take Bitcoin, 1 BTC over how many dollars, right? Same thing with stocks. How much one share over what is the US dollar price? What is the ratio or the exchange of price there? I'm willing to buy or sell one share of Apple at X price of dollars. So when all of the asset prices sell off, what actually happens is the dollar is strengthening and asset prices are dropping. It takes less dollars to buy the same good or service, right? Because the dollar's stronger. So I need less dollars to buy the same good or service. Well, the government in 2009, and then again in the last couple of months, says, wait a second, we can stop this. All we need to do to stop asset prices from dropping and to stabilize markets and have them go back to recover is let's just flood the market with money, right? So they go and they create, in a most recent situation, they've created trillions of dollars of monetary stimulus and quantitative easing, and they start giving it into the market and injecting it into the economy. They do that through loans. They do that through stimulus checks. They do that through unemployment checks. They do that through all sorts of bailouts. Like there's a multitude of ways and very exotic ways that they get this money into the economy. When they do that, what happened was asset prices stopped going down. Equities had gone down 30%. Gold had gone down 12 to 15%. Bitcoin had gone down 50%, right? Treasury, everything had sold off. When they flooded the market with dollars, all of a sudden, all the asset prices rise. And so take stocks, for example. Those have rallied off the bottom of the March price bottom, 50+%. Well, why in an economic recession where many of those companies have lost 50, 60, 70, 80, 90% of their revenue, have they absolutely exploded in value? Go back to they're priced in dollars. It's not that the stock is getting more valuable. It's that the dollar is weakening. So it's now going to take, because the dollar is worth less, you need more dollars to buy the same asset. So go to a traditional stock. Let's say a stock was $100 before the pandemic started. Well, when everything started to sell off, the stock now, you only needed $50 to buy the same stock, right? So I needed less dollars to buy that same one share of a company. So $50 to buy the same share that I used to need $100 to buy the same share. Now, once they've flooded the market and there's dollars everywhere, now I don't need $50. I don't need $100. I need $150 to buy that same stock. It's because the dollar is getting worth less and less. They're devaluing the currency. Now, why is that important? And this is kind of the big issue with fiat currencies and inflationary type systems, is that there is a very big difference in how inflation impacts the top 50% of a population and the bottom 50% of a population. So when we print money and cause inflation, the argument is if you know that your currency is going to be worth less a year, 2, 3, 4, 5 years from now, or it's going to lose value over time, you're going to be incentivized not to hold on to that money, and you're going to be financially incentivized to go spend it or go buy assets. So you're going to increase the velocity of money, right? How fast do you turn the money over? Well, if I know it's losing value, I don't want to hold it. So let me either go give it to somebody for a good or service, or let me give it to somebody so that I can get an asset in exchange, right? And then you keep money moving around in the system. That's the argument for an inflationary system. Well, the problem is that system is built on 50% of Americans not understanding how money works. 50% of Americans don't understand what I just said. They don't realize that their dollars are going to be worth less next year and the year after and the year after and the year after. So what they do is they hold the dollars, right? The bottom 50% of the US population holds their dollars. They live paycheck to paycheck and they just simply save in cash. Everything that they have is in cash. 50%, I think it's 45% of Americans do not own a stock. So they own no stocks, no investment assets. Almost 50% of Americans couldn't come up with $400 for an emergency payment, which means that these people are living paycheck to paycheck in all cash, no investment assets. But if I save $100 in the bank today, and that $100 could go back and buy one share of, let's just use Apple stock for as an example, even though it's obviously more than $100. If I save $100 in my bank today, and it could buy me one Apple share, but I wait till next year or the year after or the year after, and I've left it in cash the whole time, now I'm going to need much more than $100 to buy that same Apple share simply because my dollars are worth less. The purchasing power has been eroded away. And so what ultimately happens is the bottom 50% of Americans, they constantly have this feeling like, I can't get ahead. I'm always falling behind. I just can't get ahead. But it's because they haven't been educated on how money and the economy works. So they simply just hold cash. And when they hold cash and there's high levels of inflation, they're the ones who get hurt the most. Because if all of your wealth is just sitting in cash, it's losing purchasing power. Right? The second way that the bottom 50% of Americans get hurt through inflation is the fact that most people in the service industry, in the hospitality industry, right, hourly workers, whatever, they do not have something called an inflation-adjusted wage contract. All that means is that if you get paid $10 an hour this year and you get paid $10 an hour next year and the year after and the year after, you think I'm getting paid $10 an hour, I'm getting paid the same amount of money. But in terms of your purchasing power, you're actually getting paid less every single year, right? Rich people, they don't get paid the same amount every year. Their salary goes up. It's an inflation adjustment. It goes up 2 to 3% every single year to mitigate the impact of inflation. So it makes sure that they're at least going to get paid the same in purchasing power every single year, if not more. The bottom 50%, they get crushed by this. They do not get the protection. And so what ends up happening is they make less and less money over time, even though it looks like they're still making that $10 an hour. So the bottom 50% get absolutely destroyed by inflation. The poor get poorer. Why are rich people okay with this? Well, because this is how rich people get rich, right? The inflationary nature of the economy makes rich get richer and poor get poor. What happens to the rich people? The rich people know how money works. They understand if I hold cash, that cash is going to be worth less over time. So I'm financially incentivized to spend it on goods and services, or I should take the money and I should go buy investment assets. So what do rich people do? They don't have a lot of cash. They go and they buy stocks, they buy commodities, they buy art, they buy homes, they buy Bitcoin, they buy all kinds of assets. And they know that over a very long period of time, because the dollar is getting devalued, it will take more dollars to buy the same asset, right? If you bought a house in 1980 and you held it to today, it is very likely that that house is worth more money than it was in 1980. But is that because the house became better? Or is that because the dollar devalued? And maybe it was a $50,000 house in 1980, but now it's a $200,000 house in 2020. And it's just the fact that the dollar got devalued, and so you need more dollars to buy that same house. Well, rich people know the game, so they don't hold cash and they get investment assets, right? They get into assets that continue to go up. So they continue to get richer as inflation happens, while poor people get crushed and they end up getting poorer over time. Now, when we print lots of money, normally that leads to higher levels of inflation. So if we just print the traditional amount or the historic kind of average of money, there's about 1.5% to 2% inflation every year. There's a 2% inflation target, right? Well, when we start to print trillions and trillions of dollars, one of the fears that people have is that we will not only see 2% inflation, we'll see something more than 2%, right? And if we see more than 2% in the official inflation numbers, that means that the poor are getting punished even more and the rich are getting richer and richer. So look what's happened over the last couple of months. The billionaires in the United States have made collectively almost $500 billion over the last couple of months. How could that be when 50 plus million Americans have lost their jobs and there's a global pandemic and tens of millions of small businesses in America are going to get shut down and we're in a recession, yet the rich people made $500 billion? It's because majority of their net worth is in assets, not in cash. And those assets have continued to increase in price because the dollar is being devalued by all the money we're printing. So it's not that the rich people did anything necessarily different. They simply they understand the game. They know the rules of money. They understand how to build wealth, and they have positioned themselves to get wealthy over a long period of time rather than hold cash and see their wealth constantly eroded away by inflation. So that's how the traditional macro economy works, right? That's how inflation works. Now, what does this have to do with Bitcoin? Why is this important? Bitcoin protects people's wealth. And what I mean by that is if Bitcoin is the core unit of account, there is no inflation, right? There is no ability for somebody to go create tons more of Bitcoin and erode away the value of Bitcoin, right? There's no printing press when it comes to Bitcoin. So rather than be financially incentivized to get out of the currency and to have to go buy investment assets, you now can go from having to be an investor to simply being a saver. So in the legacy finance system, investors win and savers lose, right? That's very important. In the dollar-based system, investors win and savers lose. In the Bitcoin or the alternative financial system, this digital decentralized system, savers win because they're saving in an asset that is deflationary. It's artificial, right? The same thing like in the US dollar system where buying land, they're not making more land, so you can buy land and the dollar will devalue and your land will become more valuable as more people want land. The same thing here. They're not making more Bitcoin. There's 21 million of them that will ever be available. And the way that people value Bitcoin is in terms of US dollars. So when you hold Bitcoin as part of a portfolio, what happens is the dollar will continue to devalue over time. And as more people want Bitcoin, the value goes up. It's compounded annual growth rates over 30% over the last almost 10 years or so. And so ultimately what ends up happening is you have these two financial systems. You got a legacy fiat system and you've got a digital decentralized financial system. Dollar is the core unit of account on one side. Bitcoin is the core unit account on the other side. The way that I have personally thought about this is I believe that there is a 50-50 chance of both of these systems being the winning system in the future, right? So I personally, again, this is not financial advice. There is a lot of risk. You should go do your research. But because I have a 50-50 belief in either system being the winner, I have chosen to split my net worth, put 50% in the fiat system and 50% in the digital decentralized system. There's a lot of people who say, I don't think there's a 50-50 chance. I think that there's a 99% chance that the fiat dollar system is going to continue to serve as the global reserve currency and the legacy finance system will prevail. But there's a 1% chance. It's a non-0% chance that this Bitcoin decentralized digital system could maybe win. It's a very small probability, but it's possible, 1%. My comment to those people is your portfolio, again, not financial advice, but your portfolio should mimic what you believe. So if you think it's 99% fiat, 1% Bitcoin system, well, then you should go 99% in the fiat system, 1% in the Bitcoin system. If you think it's 90-10, then go 90-10. If you think it's 50-50, go 50-50. Like that is what people are understanding. And that is what they're getting educated on is there's now two financial systems with two different structures, two different designs. One punishes savers and rewards investors. The rich get richer and the poor get poor. The other is a much more equitable system where everyone who has the currency simply needs to save and it will continue to increase in value because supply and demand economics. If you want to understand Bitcoin, you have to understand regular economics 101 supply and demand, which is you have a fixed supply asset, 21 million Bitcoin. If demand continues to increase as it has for the last 11 years, if demand continues to increase, the US dollar value, the price will continue to increase over time. That's how supply and demand works. So that is what Bitcoin is. That's how it works. That's why it's important. And that's how it fits in or compares to the macro economy. I'm going to start taking questions here in a second. couple of housekeeping things. One, please smash the like button so way more people on YouTube can see this. Also, make sure that you're subscribed to the channel so you can see when I go live and post other videos. And then I'm putting in the chat right now. I write a daily letter to over 50,000 investors every single morning. Go to pompletter.com. Again, pompletter.com, P-O-M-P letter.com. And you can subscribe there and get the letter. I write about business, technology, finance, Bitcoin, all kinds of different things. All right, let's start with questions. I'm going to do the absolute best I can. There's over 2,000 people in here asking questions and in here. So I'm going to do whatever I can to get through this. Yes, I went 40 minutes without a breath. I actually have some wine here. So if anyone's got a drink, well, cheers. That's my first breath in 40 minutes. All right. How many Bitcoin are lost forever? So obviously, because Bitcoin works in a cryptographically secure way, right? So one of the things people need to understand about Bitcoin is the fact that when you put money, US dollars, into the bank now owns your dollars, right? That's not your money anymore. They give you an IOU. They say, you put $100 and they say, we owe you $100, but they take your dollars and they go and they lend them out. And they can lend them out sometimes 5, 6, 7, 8 times. And then they give you some interest in exchange for you depositing it there. But that's not your dollars anymore. With Bitcoin, one of the key benefits or value propositions is something called sovereignty. Again, all sovereignty is a big fancy word. It just means you're in charge. You're in control. So the whole idea with Bitcoin is you can hold the password or the private key. So in cryptography, the way cryptography works in a very basic way is there's a public key and a private key. You need both the public key and the private key to have control of the Bitcoin, right? If somebody has your public key, they can't do anything with your Bitcoin. If they get your private key, similar to a password, they now can control your Bitcoin. So in the Bitcoin system, you can control the private key, which means you're in charge. You're not reliant on a third party, right? You're not reliant on a centralized authority. You simply are in control and you have sovereignty over your wealth, right? I haven't ever said this in public before, but when we were in March and all of a sudden there started to be gyrations in the market and there started to be a lot of uncertainty and chaos, I went to the bank and I took dollars out. Right? Not because I necessarily thought banks were going to be insolvent. I didn't think it was a bank crisis, but the fact that I knew that I had counterparty risk with a bank. A bank could all of a sudden say, hey, you can only take out X dollars out of the bank, or you can't access your money today, right? Or they could say, oh, you can only spend money at these locations, or whatever it was. But I wanted control. I wanted sovereignty. I wanted peace of mind. So I went to the bank and I pulled money out of it. And so I took control of that cash and I now had the sovereignty. That's because in the legacy system, you constantly are relying on somebody else to have custody of your money and control and process your transactions. Here in the Bitcoin system, you constantly have those private keys. You're in control. So if you lose the private keys, right, going back to this question, if you lose the private keys, that means that the Bitcoin are lost. No one can get to them. And so the question is, how many Bitcoin have been lost? I think there's estimates of anywhere from 1 million Bitcoin to potentially as high as 3 million. Nobody knows for sure, but there are definitely Bitcoin that are lost. There's 18.4 million Bitcoin that have been put into the circulating supply already. There are not 18.4 million Bitcoin in the hands of people. People have definitely lost Bitcoin. You can read stories online of, they lost 10,000 Bitcoin or 50,000 Bitcoin from early on or whatever. So I think that's a key piece to pay attention to is there's 21 million Bitcoin in the total supply, but because some have been lost, it's actually effectively much less than that. So we'll see what that ends up being. Okay. What other questions? How would Bitcoin become the reserve currency? All right. So lots of people always ask me, you've got these two systems. How do they compete with each other? My personal belief is that every currency in the world is going to be digitized over time. And what I mean by that is there's going to be a digital dollar, a digital euro, a digital yen, a digital yuan, a digital, bolivar, a digital lev, all across the world. Every currency that is in the fiat system is going to be digitized. All that means is they're going to take it and they're going to create a digital version of the exact same currency they have today. They're not going to change the inflationary nature. They're not going to change the monetary policy. They're just going to change the technology. If you go back, 50, 60 years, we used to have all paper money. There was no kind of electronic or digital banking. Well, now there is. So we changed the technology form factor, and majority of the money, like 92, 93%, is not physical money. Well, now we're going to go through another transition where everything is digital. And really that just means it's on some sort of ledger, whether that's public or private, it's on a ledger. And so in that situation, you will have the fiat currencies digitized. You will also get a ton of private currencies. So you see Facebook announce the Libra currency. This is a corporation creating a digital currency. Now they've chosen to back theirs by other fiat currencies. JP Morgan announced JPM coin, which is another private currency that's backed by a fiat currency. So you got fiat currencies digitized, you've got private currencies, and then what you're going to have is you're going to have Bitcoin. And Bitcoin is really the first attempt or the first successful attempt in terms of market share and adoption to separate state and money. It is saying nobody controls this system. It is completely uncontrolled and decentralized and distributed. And so once every currency is digital, whether that's a fiat currency, a corporate currency, or Bitcoin, the technology layer is the same. There's no competition there. Everything's digital. So what I believe is going to happen is there's going to be a competition at the monetary policy level. And at the monetary policy level, I laid out the difference between the private currencies and the fiat currencies, which are inflationary in nature, and the deflationary Bitcoin. So what I believe, the reason why I believe there's a 50-50 chance is I actually have a very high degree of confidence compared to most people that the superior monetary policy is one that is programmatic, transparent, and deflationary. Now, what do those three things mean? Big words, right? So programmatic simply means that Satoshi Nakamoto, who's the creator of Bitcoin, it's a pseudonym, wrote into code exactly what the monetary policy was, published the code. Anyone can go read exactly what's going to happen. Remember, in the fiat system, people are still wondering, what is the Federal Reserve going to do at the Federal Reserve meeting this week? We don't know. There's people speculating with billions of dollars in the markets on what the Federal Reserve is going to do. We have no clue, right? But in the Bitcoin world, we can go look at the code and we know it's programmatic. Nobody can change it. It's not up to somebody's opinion or kind of human bias. It is written in code and that code executes. The code cannot be changed unless majority of people agree to change the code. So programmatic. The second thing is transparent. We can see the code, we can see every transaction, and we can see every single Bitcoin that's being created and put into the circulating supply. So you have a programmatic, transparent monetary system, right? We do not have that in the fiat world. I know more about the Bitcoin's monetary system than you know about the fiat system. You don't know what the circulating supply of the US dollar is. You don't know how many dollars were printed today. You don't know what the next decision is going to be. And you can't show me every transaction in history. With Bitcoin, I know exactly how many Bitcoin are in circulation. I know exactly how many are in the total supply. I know exactly how many are being created today. And I can show you every single transaction from January 3rd, 2009 to today. But the beauty is you don't have to trust me. I can prove to you, I can show you on the blockchain or in the database, in the code base, exactly what it is. You can verify with your own eyes. You don't have to trust anybody. And so that is why I believe Bitcoin is going to be the superior monetary policy. Now, how do we go from where we are today to actually get to Bitcoin being the global reserve currency? I believe it happens over a long period of time, and it starts with people outside of the United States, right? People where the currency is failing. So Venezuela, Zimbabwe, Lebanon, other places, they begin to adopt Bitcoin at the individual or the population level because it isn't controlled by anybody. So if your government just blew up the currency through hyperinflation, they can't come to you and say, oh, our bad, we just gave you a bad currency, but here's our new currency. You don't trust them. So you're going to opt for a thing that you know can't be manipulated. You know exactly what it is. You can verify it's programmatic and transparent. Now, as that happens, at the government level, bilateral trade today, there's a ton of negotiations that constantly go on. If there's two countries, and let's say the United States isn't one of them, so China and Russia, and they want to do a transaction, those two countries try to figure out what currency are we going to settle the transaction in. Should we use dollars? Should we use rubles? Should we use RMB? What should we actually settle the transaction? But every country knows the other countries are manipulating their currency. The US is manipulating theirs. They're printing trillions of dollars. Other governments are doing the same thing. So if you don't want to have to trust another country and use their currency, and they don't want to trust you and use your currency, I believe that naturally you're going to start to see governments saying in the next couple of years, why don't we just use Bitcoin as the settlement currency? We know that it's transparent, programmatic, and it's not being controlled by anybody or manipulated. We can just use that system. And then now all of a sudden, we both agree that that's a better system than either of our currencies that are being manipulated. So when you start to see bilateral trade being settled, I think that's going to be a big moment. Now, there have been very small examples of this in the past. I think it was Argentina did 2 separate bilateral trades with other countries. They were very small, like tens of thousands of dollars or hundreds of thousands of dollars. So they weren't big. But Bitcoin was used to settle these transactions. I think that that will become much more popular in the future. The second piece of Bitcoin's rise to the global reserve currency, and this is a very key piece, is Bitcoin is going to rise to a global reserve currency without ever firing a bullet. Now, what do I mean by that? Every single currency that was the global reserve currency before it was unseated had the strongest military backing it. At some point, they devalued the currency enough where the economy was weakened. Another country came in. They had violent conflict. They went to war. The new country won the war. They had the strong military. They had the strong economy. And they said, we now are in charge. And they put their currency as the global reserve currency. So there's always been, when a global reserve currency changes, a transition, there's always been violent conflict. In the analog world, the person who is superior in a military sense has always been the person with the best offense, right? And if you've got the best offense, you're the most powerful military, you get the global reserve currency. But that's in an analog world. In the digital world, in cyber warfare, the strongest person is actually the person with the best defense. If I can keep everybody out, I have the best defense. I'm the strongest person, right? And so Bitcoin, all of the computing power that is pointed at Bitcoin makes it the strongest computing network in the world. It is the Bitcoin network is the strongest computing network in the world. And therefore, I believe that in the cyber world or in the digital world, Bitcoin has the strongest military, right? But they don't have any weapons. They're not offensive. It's all defensive because it's fully decentralized, distributed, and it's got the strongest computing power behind it. And in that world, what ultimately will happen is that I think Bitcoin is going to rise to the global reserve currency and be the first one to get there with a all defense approach to strength, and it will never fire a bomb, a bullet, or kill anybody. The conflict is going to have Bitcoin reign supreme because it's got the best defense, the strongest computing network. It's fully decentralized. You would have to have global cooperation from every country to shut Bitcoin down. You would have to have every single government get together and say, together, 186 countries, we're going to shut it all down. It's not going to happen. And so that's where I believe over time, Bitcoin ends up being the global reserve currency. Now, that doesn't mean that every other currency goes away, right? Today, there are tens of, if not 100 plus currencies in the world. And so it's not like because the dollar became the global reserve currency that all of a sudden all the other currencies went away. There's plenty of countries that use a different currency. It's just that the dollar is the global reserve. And so just like we saw, remember what I went back to? When we saw the rise of the internet, everyone said in the beginning, I don't trust the internet. I don't know who the person I'm transacting with is. This is weird. I'm not used to doing this. How does this work? But now those businesses that went from the analog world to the digital world, they ended up becoming much bigger, badder, efficient, faster, profitable than they ever were in the analog world. The internet made them better. And that's ultimately what's happening with money, is the digital world is making money better. It's got a better monetary policy. It is able to be transacted anywhere in the world. And the defense behind it is better than any military in the world, right? There's no country that can hack the Bitcoin network as far as we understand. And so in that world, I believe Bitcoin will eventually rise to be the global reserve currency. That may not happen for 50 or 100 years. Right? Most currencies actually have a pretty long run as the global reserve currency. The dollar has been around for quite a while, but it doesn't mean that it's going to happen tomorrow. What I do know, though, is that every single currency that has failed in history has failed because the owner of the currency has devalued it, right? They've continued to produce or dilute that money, and it's gotten less and less in value, and then eventually fails. That's what happens with fiat currencies. Every single fiat currency is being devalued. The dollar has lost 95+% of its purchasing power over the last 100 years. So naturally, at some point, history would tell us that the dollar won't be the global reserve currency, right? I don't necessarily want that to happen, right? I live in the United States. I grew up in a dollar-based system. The dollar works for me. I can go to the store and I can use dollars, right? This isn't a kind of statement as to the dollar being bad as much as it is we just know, if you study history, technology, and investing, that the digital disruptor that is better and can get more distribution to a greater number of people on the internet usually beats the analog world version. And I think that's what's going to happen with Bitcoin. So again, I'll take a couple more questions before I forget. Make sure you smash the like button so more people on YouTube will see this. Subscribe to the channel. I'm putting pompletter.com in the chat. Go subscribe. I send a daily letter, 50,000 people every single day, and you can go there. Okay, somebody's asking about what's going to happen to Bitcoin moving forward. So this is really important. In June of 2019, I wrote a thing for pompliano.com where I said, I believe three things are going to happen in the future. I believe that the central bank is going to bring interest rates down. I didn't think necessarily they'd go to zero, but I thought they're going to have to drastically bring them down. I think that they're going to have to print a lot of money because we're getting towards the end of a bull cycle. And when that happens and you get the turnover of the economy and the stock market, they're going to say, oh, wait, we're addicted to stimulus. Let's create a bunch of stimulus to get the economy going again. So you're going to get rates drop. You're going to get a bunch of printing of money. And I said those two things are going to coincide around the same time as the third Bitcoin halving. So that 1,800 Bitcoin per day that was getting created each day was going to drop to 900. That happened in May. Well, fast forward to earlier this year, and those three things happened within 60 days of each other. We had two emergency interest rate cuts that cut all the way down to 0% interest rates. We got printing of trillions of dollars already, about $2.4 trillion. Many people think that we're going to see another $2 to $3 trillion in stimulus packages before we're out of this. The Fed's balance sheet could reach as high as $10 trillion, right? So you get interest rates to zero, you get trillions in quantitative easing, and the Bitcoin halving happened. In May, in early May, we went from 1,800 to 900 Bitcoin per day. And what I wrote about in June 2019 is this is going to be rocket fuel for Bitcoin. Rocket fuel was the terminology I used. Why? Because the macro environment is going to force people to look for inflation hedge assets. When you cut rates and print money, it leads to inflation. And people are going to run out of the dollar and dollar-based things, and they're going to try to find inflation hedge assets. So it's going to be bullish for real estate, gold, silver, and Bitcoin. But Bitcoin is the most volatile. It's got the smallest market cap. It's only $200 billion asset. And since it's so volatile that when all of the assets go up, Bitcoin will just go up more than the rest of them, right? Kind of volatility goes up and down. It's not good or bad. Volatility, when it goes against you, people don't like it because they lose money. But when volatility works in your favor, it's pointed in the right direction. Volatility is your friend because it means that you're getting return, right? You're going up in value. So I said, rates are going to go down. There's going to be a bunch of printing of money, and we're going to get the Bitcoin halving. All three of those things happened. But not only did they happen at much, much greater scale than I could have ever imagined. We have interest rates at zero. We've printed trillions of dollars. The Bitcoin halving occurred. Look right now. Out of all of the asset classes, crypto has outperformed every single asset class in this recession. So stocks are basically flat year to date. Gold is up 25%. Bitcoin is up more than 50%. Bitcoin is up more than 50% in 2020, right? So what ends up happening is exactly what I said. As you get that violent move upwards in all asset classes because of the inflation, remember, the dollar's being devalued, asset prices rise, rich get richer, poor get poorer. Bitcoin's just going to go up more than the rest of them. We've already seen that playing out. I think over the next 18 months, we're going to continue to see that. And what ultimately happens, go back to supply and demand. The Bitcoin halving is a supply shock, right? 1,800 Bitcoin used to be available every day. Now there's only 900 that come online. So that supply shock means if demand stayed constant, if demand didn't change, the price would naturally go up because there's less of this available on a net new basis. But instead of just having the supply shock, we also had a demand shock because now they're printing so much money that people are saying, wait a second, I got to go get out of the dollars and go get into these inflation hedge assets. So you get a supply shock, you get a demand shock. And what I think that serves is this rocket fuel that sends Bitcoin's price exploding upwards. It's up 50% so far this year. It's up 50% since January 1st. That includes at one point, it went down 50%. So Bitcoin has gone from earlier this year, all the way down to about $3,800, and now is at $11,000 plus dollars. Absolute incredible upward volatility. And it's because the macro environment is forcing investors to go into Bitcoin. This happened in 2008, 2009. Remember, gold went down 30% in 2008 during the liquidity crisis. They started printing lots of money. Everyone ran to gold. When they ran to gold from 2009 to 2011, gold went up more than 200%, and it ended up hitting an all-time high. Right now, people are doing the same thing. They're printing tons of money. They're running to gold. They're running to Bitcoin, right? And when they do that, you're seeing those assets rise. But Bitcoin is outperforming gold this year by 2x. So gold's up 25%. Bitcoin's up over 50%. And so that's going to continue because Bitcoin is a much more volatile asset. It's just a smaller market cap. Of course, it's more innovative, disruptive, new. So it's going to continue to go up. So I think that's what's going to happen. I'm publicly on record. Again, not financial advice. There's risk. Do your research. All the normal disclaimers, right? I believe that Bitcoin is going to hit $100,000, $100,000 US by the end of December 2021. So basically, we're in July of 2020 right now. By the end of December 2021, I believe Bitcoin will hit $100,000. People say that is absolutely ridiculous. But what we see with Bitcoin is Bitcoin has these big boom and bust cycles. And every time, if you bought at the bottom of the last bust cycle and rode it through the boom and into the next bust, that bust cycle was always higher than the previous low. So it continues to establish higher lows. And the reason why that's important is those boom and bust cycles are naturally how assets grow, right? And so Bitcoin is likely to go from where it is today, go all the way up to $100,000+ by the end of next year, and then it'll crash again. But when it crashes, it's not going to come back to $10,000. It may crash to $30,000, $40,000, $50,000, right? It'll kind of go through another multi-year bear market, and then it'll run again, and it'll continue to gain more and more value. If you believe that Bitcoin is only a store of value, it's not a medium of exchange, it's not money, you can't use it to buy things, whatever. Right? There's a lot of people who believe that. And it's just a store of value, right? Like gold. Today, Bitcoin's market cap is $200 billion. Gold is $7 or $8 trillion. So let's just use $8 trillion as the number. If Bitcoin reaches gold's market cap, that means that Bitcoin would 40x to get to gold's market cap. Think about that for a second. The analog store of value versus the digital store of value. If you think that Bitcoin can hit the same store or the same market cap as gold, that means that the Bitcoin price would have to go up 40x to get there, right? Pretty crazy when you start thinking about it. I personally believe that Bitcoin is not just a store of value, it's actually money. And so when you think of Bitcoin as money, then you say, well, what is the global monetary supply? The global money supply is somewhere in the $70 to $90 trillion, depending on how you count. So that means, let's take 80 trillion as the easy number. That means that Bitcoin, if it was to go from a $200 billion asset and reach $80 trillion, which is the global money supply, so kind of match the money supply, there would be a 400x increase in Bitcoin's price. Again, very, very small chance that this happens, but that's what the numbers would show you to go from a $200 billion asset to an $80 trillion asset. Right? It's kind of showing you how small Bitcoin is. But I actually believe that not only is Bitcoin money, it is a market expanding type of money. What do I mean by that? When Uber was a startup and they were pitching people, they would say, we are going to try to disrupt the taxi industry. Sounds pretty cool. But when you look at the taxi industry, it's really not that big. And so if you simply just said, okay, Uber's here and they're going to try to disrupt the taxi industry, that means that Uber can, 20 to 30x. Not a bad return, but it's not insane type returns, right? It's not multi-billion-dollar company type returns. And so that would have been a fair assessment. But what actually happened is Uber ended up not only beating the taxi industry, it ended up expanding into other areas. And now it's a ride-sharing company. So it beat the taxis, it beat the black cars. It also beat car ownership. There's many people who don't own a car because they use Uber. And so this market expanding technology means that it actually was bigger addressable market than people originally realized, right? Airbnb is another example. If you said, hey, Airbnb is simply going to be a competitor to hotels, you would look at the total addressable market of hotels. But Airbnb is different. Airbnb competes with all different types of lodging. You may actually say, I don't even want a hotel in my own city. I just want to rent an Airbnb so that I can go have an event there and then come back to my house tonight. And so it's a market expanding technology. And so it's a much bigger addressable market than just hotels. Bitcoin is the same thing, in my opinion. It is not just competing with gold or competing with the money supply. It's actually got the possibility to be much bigger than that. Now, how does that work? Murad Mahabdid came on the podcast that I run, and he gave a great kind of breakdown of this. And basically what Murad said is, go back to what the dollar incentivizes people to do. Get out of the dollar and get into store of value assets. So take your dollars and buy art, real estate, precious metals, stocks, etc. Well, if all of a sudden the currency, the global reserve currency, ends up being able to be Bitcoin, and it's this deflationary system, now you aren't financially incentivized to get out of the currency. Now you can just hold Bitcoin. And when you do that, what you'll do is you actually steal market share back from those store of value assets. So you will steal market share back from art, from real estate, from precious metals, from all these other assets. You'll simply be a saver. The fiat system rewards investors and punishes savers. The Bitcoin system rewards savers. And in this system, if it can grow and have global adoption and become a global reserve currency, now all of a sudden it will steal market share. And so you're not talking about just getting to $80 trillion. The number that Murad used was $150 trillion market cap, right? It would start pulling back all of the market cap from these other assets. Now, I'm not smart enough to do the math on 150 trillion. So let's just simply use 160, because that's double 80 trillion. In that case, 400x would be from 200 billion to 80 trillion. Well, that means it's 800x from 200 billion to a $160 trillion market cap. Now, I'm not claiming that it's going to go to 150, $160 trillion, but that is the way to kind of look at the growth trajectory. It's a $200 billion asset. It could grow to gold's market cap, which would be 8 trillion. It could grow to the global money supply, which would be about 80 trillion, or it could grow and actually be a market expanding technology and grow to 150, 160 trillion. So you would be looking at 40x, 400x, 800x. Again, I don't know what's going to happen. I believe that there's a 50-50 chance between the fiat system and this digital decentralized system. I'm 32 years old. I'm young. I've got a very high risk tolerance. I understand that I could lose the 50% that I put in the Bitcoin system, right? So whatever you invest, you can lose. So you have to be careful. You have to do your own research, all of the normal disclaimers. But I'm willing to take that risk because I believe 50-50, right? You've got to figure out, what do you believe? 99-1, 90-10, whatever it is, that's what you got to do. All right. I'm going to answer 2 more questions, and then I got things I need to go do. I need to plug this in so that my computer doesn't die. Let's see. What other questions? Do you think that Bitcoin will always lead the way in terms of value if there's a better technology such as Litecoin? Okay, so what about all the other cryptocurrencies is basically what this question's asking. There's lots of people who ask this question. And what I always go to is 2 key things. There's about 5,000 crypto assets, right? And I use assets for a very specific word. There's 3 types of crypto assets. There's cryptocurrencies. These are cryptographically secure digital assets that are trying to be money, right? So cryptocurrency. There are utility tokens, which basically are things that give you access to a network, a product, a service. Think of this. This could be like, tokens at an arcade or something like that. Or there are kind of the security or investment assets, right? So this is like taking the equity of a company and digitizing it or tokenizing it. So there's cryptocurrencies, there's utility tokens, and then there's kind of these tokenized securities. There's actually a very small number of them that are trying to be currencies, right? Of the 5,000, there might be 15 or less that are trying to be money. And in there, the market has determined, this isn't my opinion, the market has determined that Bitcoin is far and away the winner, right? Could that change? Sure, anything's possible. But going back to what is money? Money is a belief system. And when you have belief in a network, and there's tens of millions of people who have all bought in, money is a very viral product, right? We send it back and forth, and people get locked into the network effects, right? And so think of the dollar. If you use the dollar, you probably don't use another currency. You just use the dollar. You're locked into that system. Everything's priced in dollars. Everyone accepts dollars, right? You have dollars. You're paid in dollars. You get locked in the system. In the Bitcoin system, there's tens of millions of people who've adopted it, and they're getting locked into this system. And so in order for something to unseat Bitcoin as the king in the cryptocurrency vertical, you would need that belief to break down and for something else to capture the belief. I personally do not believe that's going to happen. And it goes back to the same example, like when Venezuela's Bolivar fails, the government comes back and says, oh, sorry, our bad. We have this other currency now that you should try our second one. Nobody believes them. I think that's what happens in a decentralized digital currency. Bitcoin is the one attempt to separate state and money and to have a decentralized, distributed kind of system, right? Or deflationary digital currency. If it doesn't work, nobody's going to trust the next one, right? It's got too much market share. It's got too much adoption at this point. Too many people would get hurt. And those people happen to be the early adopters for this type of technology, that if it actually didn't work, the next one that came along, everyone would be like, we saw that already. It didn't work. And so the only thing that you could do is you would have to wait for those people to literally die, and then somebody could try it again. But I don't think that anything, if Bitcoin doesn't work, I don't think there will be a decentralized digital currency. So it's basically Bitcoin or nothing in the currency vertical. Now, the other, call it, 4,900 plus currencies that are out there, there's all kinds of debate, what's valuable, what's not valuable. I'm not going to cover that stuff now, but those aren't trying to be currencies. And so it's really important to kind of break off in the crypto world what's trying to be a currency. Bitcoin's the winner. The markets determine that, and I don't think that's going to change anytime soon. Usability of Bitcoin. So this is another thing that people always ask about, which is Bitcoin is quote unquote slow, right? It's something that people will say. If you look at the fiat system, gold was the layer one, right? So we had gold, and gold was hard to transact. It wasn't divisible. It was hard to move around. It wasn't portable, all that kind of stuff. What we did was we took gold and we said, we're going to put it in a vault. And then we're going to create a paper claim on that gold, a layer two. So now you can just walk around with these pieces of paper and spend those. And we know that it's backed by the gold that's sitting in the vault. Then we built on top of that electronic money on top of the paper money, easier to transact. And then we even built credit and other things on top. So there's kind of multiple layers to the fiat or the dollar system. Started with gold and then went paper claims, digital money, and all the way up. That's what's happening with Bitcoin. So gold was super secure, super provable. You could have sovereignty of it, all of these things. Bitcoin is the exact same. The transactions get processed, batched together every 10 minutes. Like we talked, a blockchain, a chain of blocks of transactions every 10 minutes. So people will say, oh, it's slow. But think of it as a spectrum between you can have speed or you can have security. Bitcoin, just like gold and the dollar system, has chosen for layer one to optimize for security. It is much more important to be secure at layer one than it is to be fast. And so by being secure, what you're now seeing is we're already building layer two, which is, you might hear something called the Lightning Network or other things. And so that layer two is similar to the paper claims on the gold. It's a little bit easier to carry around and move. It's a little bit cheaper. It's a little bit faster. It's a little bit more efficient. That's exactly what layer two does. Layer two is built on top of layer one, and it makes it more efficient to spend and use Bitcoin. There will be a layer three, a layer four, et cetera, on top of it. And so over time, it will become much, much easier to use. It will become faster, more efficient, cheaper, all of these things. But going back, money is the most important asset in the world, right? Just like gold had to be the super secure sovereign asset at layer one, the Bitcoin network as it's designed had to be the super secure sovereign asset at layer one in this new system. And then you'll get the additional layers on top of it. We're only 11 years into this, right? This is a multi-decade rise to become the next global reserve currency. And so I think that's what people really have to understand here is this is not just about how fast is it today? How shiny is something today? How innovative and all that kind of stuff. It's all about you have to be very methodical, very safe, very secure, and very intentional about what you're building because today there's $200 billion in value at stake. If Bitcoin was to be blown up, right, in terms of a self-inflicted wound, there was a bug introduced in the code, something like that, there'd be $200 billion of value that would dissipate or disappear and evaporate. And so in that situation, security, safety, methodical, intentional work is the most important thing. That's what Bitcoin's doing. I actually think it's doing exactly what it needs to do. So, all right, I'm going to take one more question before I do that. Go smash the like button so we can get more people on YouTube to watch this. I'm trying to get 100,000 subscribers. We're really close. So make sure you're subscribed to the channel. I'm going to put pompletter.com. Again, pomp, P-O-M-P, letter.com. I just dropped the link in the chat. Go click on it. Sign up for the daily letter that I write to 50,000 investors every single day. And let's see. All right. I've seen somebody put in here 1,000,000 times, lengthening cycles. Yes. So this last question I'm going to answer. Lengthening cycles basically is this idea that those boom and bust cycles I talked about, they continue to get longer in timeline. So in the beginning, it might have been, a 6-month boom cycle and a 9-month bust cycle. And then it would be a 12-month boom cycle, then an 18-month bust cycle, right? And each time the boom and bust gets longer and longer. What it really is doing is not only is it lengthening in time, but it's also getting less volatile. And the reason is because more and more people are adopting it. So if you think back to Tilray, which was a marijuana stock that got floated, I think it was in Canada, and it exploded in value. I mean, this thing went up like hundreds of percent. Everyone was freaking out. The reason is because they took all of the stock for the company and they only floated a little bit. I don't remember what it was, 1 or 2%. And there were so many people that wanted it, but there was only 1 or 2% of the stock available. And so because there was this frenzy in demand, the price exploded, but the company and the directors and employees held most of the stock back, right? So there wasn't that much float. Well, in the early days of Bitcoin, the first 10 minutes, there was only 50 Bitcoin in circulating supply. Then after 20 minutes, there was only 100. After 30 minutes, there was only 150. So it was very slow in terms of putting it into circulating supply. Fast forward 11 years, now there's 18.4 million Bitcoin in circulating supply. So there's been a dilution or more liquidity in the market, right? So that lowers the volatility because there's more liquidity. There's also been, in the beginning, there was only a couple of people using Bitcoin. Now there's tens of millions of people using Bitcoin. And on top of all of that, you start to see that there is a very, very high percentage of Bitcoin that hasn't moved in long periods of time, right? What we call strong hands. If you believe a deflationary asset is going to continue to get more valuable over time, why would you spend it? You're going to get it and you're going to hold it. And when people hold it, that ends up being a floor for the price. So when you get these boom and bust cycles, there's some percentage of Bitcoin that don't move, right? 50% of Bitcoin haven't moved in like 5 years or some crazy number like that. I don't remember the exact number. In those situations, you get a lengthening of the time, you get less volatility, and ultimately you get a continued increase in price, right? Like I said, 30% compound annual growth rate. So that's basically what happens with this. All right. I've gone for more than an hour and 15 minutes. I promised Polina I was only going to go for an hour. So I'm in trouble now, which means I'm going to get the hell out of here. Go smash the like button. Please, please, please. Let's get more people watching this stuff. More people need to be educated, learn about Bitcoin, learn about the economy. Make sure you subscribe to the channel, pompletter.com. I just put it in the chat. Go subscribe, and I will try to do these more often. I appreciate all of you coming here to watch this, and have a great night.